Hello, Mario Hernandez, CPA from Miami Accountant. Today we're going to be talking about Fishbowl Advanced Desktop and its integration with QuickBooks, specifically related to purchase orders and accounts payable and receiving inventory, reconciling that inventory, and the accounting that happens behind the scenes, the implications of it. I have a lot of clients that have personnel that they might do things in Fishbowl without realizing the accounting effect that things have. And so we're going to talk about that accounting effect that those transactions will have. So let's go ahead and come on over to Fishbowl, and we're going to start by creating a purchase order. Hit new, go ahead and use A and B distribution. And let's say we're ordering 100 units of these accessory bike bells and 100 units of the discount brake cables. The bike bells are $10, the brake cables are $20. So that gets us a grand total of $3,000 for this order. And once I hit issue, this is now an issued order in the system. In Fishbowl, you're gonna show that inventory is incoming, and that's really it. It's not gonna affect QuickBooks in any way. Purchase orders are order management tools. They help the inventory team order inventory, know what's coming, and that's really it. It's not going to have any accounting effect. So if I was to synchronize with QuickBooks, it's not going to push anything over to QuickBooks. Later on, when the inventory is received, then we're going to have an accounting effect. That's when financially you need to record the inventory value in your books and the liability of the payable in your books. So let's go and receive this purchase order and see how that works out in QuickBooks. We'll come over to the receive module. And then within the receive module, we're going to receive this purchase order by clicking on receive. And now we get these little receive truck symbols showing that this has been received. Now we have an accounting effect. Inventory is received. We need to show that in our books. We need to show that in our balance sheet. And we need to show that there's a liability in our balance sheet as well. So let's go over to the accounting integration module and go ahead and export. And when we export, we're going to see that an item receipt, there's going to be a possibility of one, and one is going to show up as exported. You can see that here. Let's click OK, and then let's come over to QuickBooks. To see the transactions that just came over from Fishbowl in QuickBooks, the easiest way is to go to the Edit menu and go to Find. Under Advanced Find, you want to make sure that your detail level is set to Summary, and then your entered modified date, make that today. And you can see the things that have been brought over from Fishbowl today. When we hit Find, we'll see that there is an item receipt that Fishbowl created. This is our purchase order 571. And this is the order that came over from Fishbowl. You can see the total is $3,000. It shows the items. It shows FB underscore item. That's how all the Fishbowl items come over for desktop. And then the description is over here. If I come over back to Fishbowl to check out the purchase order, it's the same exact information. We have our $3,000, our same vendor, and the same receive date that we put on our receiving. It's there. So March 30th, that's our receive date. That's the same thing we're seeing over here in QuickBooks. One thing I want to point out is if we go over to the reports tab, we're normally on the main tab. If we go over to the reports tab and click on transaction journal, you can also press Control Y to see that. It's going to show you the accounting that's happening behind the scenes in QuickBooks. We're having our inventory asset debited for each one of these items that are being received for their total value. So we have $1,000 on one, $2,000 on another. That gets us our total for the bill for $3,000. And then accounts payables being credited for $3,000. Both of these are balance sheet accounts, so this is not affecting our profit and loss. We're just receiving inventory, showing that we now have a value of inventory, and we have a liability for this inventory. This is an item receipt, so if you were to go within QuickBooks to pay bills, to the pay bills module, this will not show up. Item receipts do not show up on the pay bills module, but they still do affect your accounts payable. And the other thing I want to point out is the transaction number. Transaction number in QuickBooks, that's different from your reference number. The reference number is usually used for the invoice number. Transaction number is an internal number that QuickBooks uses. It's a sequential number that it automatically numbers. Every single transaction you create in QuickBooks gets a transaction number. So this is transaction number 434. I'm pointing that out because this item receipt, I don't recommend doing any modifications to it. Don't add any notes to it. Don't add attachments to it. And the reason is because when we receive the bill and we reconcile that bill in Fishbowl, Fishbowl's going to delete this item receipt and create a bill. So it's not going to keep this transaction. It's not going to turn it into a bill and keep the same existing transaction. It's going to delete it and create a brand new transaction in QuickBooks. So anything you might have done to this item receipt, it's going to go away. It's going to get deleted. And that's why I don't recommend doing too many things to this item receipt, because you'll lose those changes. Let's close this up and then come back to Fishbowl, and let's go to the next step. We have the purchase order. It's been received. The next step is to reconcile it. Reconciling in Fishbowl is telling Fishbowl we've received the bill. We want to put in the bill invoice number, and now we're going to reconcile. So let's say the bill number is 1001. That's the vendor's invoice number. And then the bill date. Don't ever put the bill date here, the invoice date. I know it says bill date, but accounting wise, that's not a good idea. And instead, I recommend putting in the receive date. So I'm going to put in March 30th, 2024. The reason for that is this bill date is the date that you're going to get on your bill in QuickBooks. Let's say that the vendor sent an invoice date of April 1st, but you really received this on March 30th. Your balance sheet should reflect $3,000 in the inventory asset account. It should reflect $3,000 in your accounts payable liability account. That should be reflected in March because that's when you received it. That's when an accounting entry needs to be recorded. That's when physically it happened. You took ownership of it. It needs to show up in your books in March. If you put the invoice date of April 1st, it's not going to show up in March. It's going to show up in April in your financials in QuickBooks, and your financials are going to be wrong. So put the date that it was received. Keep the date that it was received. You have it right here for a reference. Just put that in. So you might notice that by doing that, your due date is going to be wrong on the bill. And that is true. That's an unfortunate side effect of this. So whatever your due date should be, you need to manually update that in the bill in QuickBooks. And that could be a little tedious. It's not too bad because, I mean, like as soon as you save this, you can synchronize with QuickBooks and update it right there. It's really going to take 30 seconds to do it. And it's going to keep your financials correct. That's the most important thing. As an accountant, as a CPA, I want my financials for my clients to be correct. Having the receive date up here is going to make sure that they stay correct. So let's go ahead and hit next to go through this. And we're going to come here to the summary. I'm not adding any landed costs. That's for another video. And I'm going to hit finish. So we have now our check marks. The check marks represent that the bill is fulfilled. Fulfilled means that it's been both received and reconciled. Once you do both of those steps, it's considered fulfilled. We're going to come back to our accounting integration, and we're going to send this over to QuickBooks. And I'm going to jump over to QuickBooks so we can watch this item receipt get deleted, disappear, and get replaced with a bill. So we saw the item receipt go away. Now there's a bill. I'm going to double click that bill, and we can see that we have our reference number. It came over from Fishbowl. The receive date is in our date field here. If I click over on transaction journal, this is no longer transaction number 434. It's transaction number 435. So that proves out that the item receipt is not kept. Fishbowl doesn't modify the item receipt. It doesn't keep it. It completely deletes it and creates a brand new transaction. And we can verify that by looking at that transaction number. The accounting, however, it's identical to the item receipt. Our inventory asset is updated by 3,000, debited, increased. Our accounts payable liability, it's increased by 3,000, being credited. So our balance sheet has been updated. So again, it's not modifying the item receipt. And within QuickBooks, your item receipt is really the same transaction as the bill. It's just toggling this check mark. That's all it is. Toggling it, it changes it from item receipt to bill. But that's not what Fishbowl is doing. Again, it's deleting the item receipt and just creating a brand new bill. So that's the entire workflow that happens between Fishbowl and QuickBooks in terms of generating a purchase order, receiving that purchase order, it creating an item receipt in QuickBooks. Then you reconcile the purchase order. It deletes the item receipt and creates a bill in QuickBooks. And remember to use the receive date, and then come over here to QuickBooks and manually put in whatever that bill due date should be, so that your bill, whenever it's time to pay it, you have the correct date on there. If you get any discount for paying within a certain period, you want to make sure you update that bill due date so that you can get that discount for paying on time. So I'll go ahead and save my changes for my bill due date, and that pretty much wraps up our process. Please subscribe and hit that like button to support our channel, and we will see you next time.